with Polycab. Polycab, even without the IT raid news, was an extremely expensive stock, right? And I think what happens now is these news just become an excuse for the froth to clear out. Recent example again, I don't think Balkrishna Industries is any excuse me is in any of our portfolios, but there was also news of an ED raid in Balkrishna Industries, right? The stock is fairly valued, or currently I would say undervalued. That news had no impact on the stock, right? Because you understand what I'm saying. You understand where I'm getting at. I'm trying to say that unless the business is extremely expensive or there's something dramatically wrong, these events will not have an impact. Again, with Adani, the Hindenburg issue, the only reason why it crashed that bad was because it had very little earnings support. So this is a part of the game. I don't have any strategy around this. I probably don't intend to either, because the idea is I am looking at the valuation side. Like for example, we have a small case called the New Age small case. We have Paytm in that, right? We added Paytm at 800. It went up to 900, 950. It crashed to 380. We did nothing because effectively the company is still. I think my hypothesis with the company has not changed. Maybe with the new with March quarter results, if we see something where I would want to take a call, I would have to book losses. But it's may one more concept which works now is now with your portfolio you have 18 stocks or 20 stocks you have in the portfolio. The average allocation to a stock will never be more than 6-7%, unless it's an ETF, in which again that ETF has more stocks. What will happen is if the market grows and if all other stocks are growing, if there's one stock which has an issue, like right now RHIM, I had a question I forgot to address. Somebody asked me why we are still holding on to RHIM. RHIM we added in the portfolio at 700, it went up to around 900, it came down to 550. At the end of the day, it is a great company, right? The whole idea of a portfolio and having multiple stocks is to defend yourself against this noise and this volatility. Like had I known कि अगर मेरे को पता है कि कोई कंपनी में गड़बड़ नहीं होगी, so I will buy that one stock for all the money I have. Then I wouldn't need to create a portfolio only. But the whole idea of creating a portfolio is hedging myself against all these issues. Now today, RHIM ka exposure has gone from 5 to 3% because the stock price came down and all other companies went up, right? So that way, my exposure to all my stocks in all my portfolios are in a way dynamic. See, one more thing now is we take a lot of pride in saying that our ace, like our our differentiation is our quality centricity. You will notice that we have not compromised on quality. Even with the tiny returns portfolio, our stocks are in most cases debt free. Again, see, to answer your question, if an event would happen where the company would, if the company is dead, like it's a total write-off situation, right? Like a Satyam situation. In that case, rebalancing will not really help. Like I can rebalance it today, and again, the problem with small case here is that if I was a PMS, I could do that. I could do that agility of exiting a stock immediately. It would happen. With small case, वो होता क्या है कि मैं आज rebalance करता हूँ, आपको कल सुबह notification आएगा. कल सुबह वो company circuit में नीचे की. ठीक है. आपका rebalance of that exit will happen the day that circuit opens, right? Now say that that company is on a lower circuit till 80%. After an 80% correction, I will not sell that stock because it's a write-off. वो खत्म हो गया. My only way of recouping that lost wealth is by holding onto that stock. But with small case, what will happen is on that day your trade will get executed. Now, see, I know a lot of small case managers do that, and they do it probably to save their returns because my return on small case has nothing to do with my execution, right? But again, here we are trying to build relations, and if I do that and you get the rebalance, you try to rebalance it, the stock does not get exited because of the lower circuit. I will ruin that relation with you. I thought it would work out in a certain way, but then in one quarter the stock crashed, and I had better opportunities because everything else also crashed. Right. So we took that switch. Now I think for me to comment on if we have a system in place for this would be oversimplification. It is not the way, like what we are doing is not really that. I cannot reduce it to that one flow chart of a system. I like to call what we are doing like it's a symphony because there is so many things happening, and only when all these things are put together it becomes good music. Like it's really melodic for us as investors in these portfolios because there are so many components to it which are all working in synergy. Like if you notice the current rebalance we had, we did quite a good, like we swapped a lot of companies and we bought like 4 or 5 companies we replaced, right? Because we got very good value proposition with these companies, and the the next quarter is looking very good for these new companies that we added. And the other company, like we exited Amaraja recently, right? I think that decision was done because my original thesis was Amaraja is so for all new cars you'll have Exide. Cars replacement is Amaraja. Now the the auto market came back up in like 3 years ago around, which Exide started going up dramatically. It went up. It went from like a 10-15p to a 30p right now, and it's been 3 years. So the idea was that the replacement market will come back. We got into Amaraja around 600 levels. The stock went up to around 900. The results were good. We made good money throughout that. But then the correction on Amaraja was something we were not expecting, right? So now again, see, we also work with EMH, like efficient market hypothesis. So the market knows something that I don't know. Okay. Now I'm also having the new stocks that we added. We looked at those and and those have much better opportunity. Like I will want to put money on something where I'm 100% sure that this will go up 20%. Does that make sense? Like, it's a little counterintuitive, but the idea is to make sure that the companies you're buying don't blow up. Like again, if you notice, all the companies have a very low debt, and all these companies are very strong names in their industry. So here, our advantage is also that we are able to switch in a correction. And अगर आप देखोगे तो इस correction, like in the past 3 months correction, we booked profits more than losses. So that way, our clients are really happy that we got money home, and the losses we booked, probably the ones that we bought now, will make more return than these put together. Obviously, like, not separately but put together. It will so so the thing is, see, it will be 3 months unless there is something we need to do. Like so the way you should see it is at least 3 months. Like अपने 3 महीना में एक बार तो definitely करेंगे. और अगर बीच में कुछ हो गया when we have to do it, then we have to do it. Then that is not something, it's not something we can uh, foresee. Exactly. So, I think when we started the whole business and we saw there was so many portfolios and small cases in the field, one thing we've stuck on to is that, I want to make mine a little unique, because if I'm doing what everyone else is doing, it's a rat race, and I will not win a rat race. So what we've done with our Momentum Masters, you can say it is a little bit of price action, but we are doing it with only the best of the best quality companies. So our advantage is, in a bull market, all stocks will go up, right? As we've seen. But in a bear situation, like the last 3 months, when flight to safety, when people start panicking, they will start buying these companies which we have in our Momentum Masters portfolio, which is how it worked in this one last quarter. You know what I mean? So what will happen is, in a bull market, we're all going up. Thank you. In a bear market, we will go up when others won't, because the panic, which is normally the enemy of momentum portfolios, will become our friend. We do. So we have this portfolio called Scalable Futures, in which we have 10 to 11 stocks. But the only issue is that वहाँ पर it is because these companies are listed and they have their derivatives listed. The minimum investment there is like 75 lakhs. So we don't market it. We have it for like a very handful of clients. But yeah, but again, I think my whole agenda of here is to help you scale your portfolio, and think about it. If you're being able to scale with a 19 stock portfolio and you're making the same return that you would make with a 10 stock portfolio, do you really want to take a concentrated bet? So, so my money is 100% invested in the sector advantage portfolio that we have. Like that small case is where all of my money is parked or invested in. The reason why we started investing in our portfolios was because unless I understand the problems that other investors will face, I cannot make a product, right? So that's how we started investing in our portfolio. Now, so वो करते करते क्या है कि पूरा उसमें लगा हुआ है. To answer your SIP question, for businessmen, SIP is not something they can commit to, because I don't know what I'm making on a monthly basis. But if I was doing a job, if I knew my paycheck, I would do an SIP of whatever is left. Like, I think this is something I've told all of my friends also. Again, age is a big factor. So the way I like to put it is, unless you have dependent parents, a child, or you're about to get married, right? You're like on the first of every month when your paycheck gets credited to your account, whatever money you have left in that account should get invested in your, like a 50-50 portfolio of equity and debt also would work. Because that way what's happening is you know that you're not supposed to overspend. A problem with people nowadays in like our generation is what happens when they look at money in the bank, they want to spend it all. ऐसे इसमें क्या होता है ना कि इवन अगर आप सोचो कि आप बैंक से रुपए निकाल के डेट ही खरीद रहे हो, अगर वो बैंक पे नहीं है ना तो आपको पता है कि वो खर्चा नहीं करना है और आप अगले महीने के सैलरी से उस महीना का निकाल रहे हो. Does that make sense? It's a little. I'm probably not allowed to make it this simple, but this is how I would have done it. No, so I think I've realized that timing the market is very futile because it takes a lot of effort. Like to time the market will make sure you start taking BP medicine, right? And it doesn't pay off. Like I think the best people I have come across who've timed the market perfectly have made 35% CAGR, and I think I've made without timing it 27% CAGR. So and it is much more relaxed on my end. So I think for you also, if you're a salaried employee, you could start doing an SIP and see Tiny Titans is designed for SIPs, right? Because that's also why we've kept the payment amount smaller, the minimum investment is smaller. And the idea is because I understand that we are buying small caps that have a certain amount of risk. The advantage of motivating people to do an SIP in that is that this risk will automatically get it'll get worked around. Even if you rebalance it now, again, rebalances and that is once a quarter. So you know that अगर आप 3 महीने वो शेयर ले रहे हो और वो घट रहा है, ठीक है, probably when we rebalance it and if you don't like it, you will still probably sell it at a premium, like you'll sell it at a profit. So the Nifty small cap, their median market cap is 11,000 crores. Okay. And the Tiny Titans portfolio's median market cap is somewhere around 4,000 crores, 3,400 to 4,000 crores के बीच में. So technically वो benchmark गलत है. मतलब क्योंकि जो 4,000 crore company, as I mentioned, most of our stocks got dunked because of liquidity. Like a 200 crore company, if someone's selling 1 crore worth of stock, that company will get bashed, which is what happened, right? So again, similarly, comparing my momentum masters with the Nifty small cap benchmark is also not correct because momentum masters the median market cap is 30,000 crores, and with sector advantages around 20,000 crores, right? So these are all much bigger companies than the small cap. But then this is how we have to benchmark. We can't help it.